Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about Nio stock and how it absolutely has surged today by over 17% as of right now, and we're going to talk about how high the stock price can go, if it's going to continue to trend upward, and if the risk of investing into this hyper growth stock is going to be worth it for investors. For more Nio stock news videos, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below about Nio stock, and without further ado, let's jump right into today's stories. So we're going to go over why Nio is in their high growth phase right now, when they're going to reach profitability. We're going to go over what analysts' price targets are for Nio stock, as well as the latest stock news, because many investors are concerned over political risks regarding Chinese stocks, and they very well should be. We're also going to talk about why Nio and other Chinese stocks have absolutely surged today, and then lastly, we're going to determine if Nio stock is going to be an overall good buy for investors or if it's an absolute money pit. So starting off with our first article, we know that Nio designs and develops smart electric vehicles, and they're based over in China. The company is currently listed on the New York Stock Exchange. However, negative news has come out recently about the delisting risk for Chinese stocks on American exchanges, which is why Nio has branched out to list on other exchanges such as the Hong Kong Exchange, as well as a stock exchange over in Singapore. However, analysts are still very bullish on Nio overall, because right now the current stock price trades for around $18 per share. The low-end analyst price target for the next 12 months is $20. The average price prediction among professionals is $51, and the high-end bullish price target for the next 12 months is $87 per share. The reason I say that analysts are very bullish on Nio stock is right now around 30 analysts cover the stock, with 27 of these analysts saying that Nio is a fantastic buying opportunity, and 3 of these analysts just say to hold, while none of these analysts say that the stock is going to underperform the overall stock market, and none of them say to sell the stock. So this recent bounce in the stock price recently has taken investors by surprise, but honestly, you really shouldn't be surprised, especially if you follow this channel, because I released a video about 10 days ago saying that the Nio stock price is going to surge, and then I also 5 days ago did another update price target video on Nio, Li Auto, and XPeng, all of which have surged sky high today. So remember to smash that like button and subscribe if you are new so you can stay up to date. More good news is that the overall company does not seem to be in any financial distress, and their growth prospects are absolutely amazing, which we're going to look at. We're going to be going over their revenues as well as when they're going to achieve profitability. They do have some debt right now, about $2.6 billion worth of debt, but I think they are using their debt rather wisely. It also recently unveiled the ET5 sedan, which is going to start production in the second half of 2022, which is very exciting. Analysts also anticipate seeing a rise in their sales by the end of 2024, and they actually think that the company could quadruple their sales by this time. So the company is literally going to 4x their overall sales, and Nio is already bringing in very fantastic revenues. If you look on the chart right here, we can see their overall projections. So right here, we can see where we are right now, and they have very good revenues, decent earnings, decent free cash flows, and all right cash from operations. However, as you can see from the projections, their revenues are anticipated to absolutely skyrocket, which is seen right here on the blue line, while everything else is just going to be above baseline. So the growth of this company's revenues is really going to be reflected on how well the company can implement their overall business model. However, investors really need to see profits and more free cash flows to properly value this company overall. I also want to highlight that profitability is going to be imperative for 2 major reasons. The first, it's going to give investors an actual reason to buy this company, and the second, it's going to confirm that this business is a solid business fundamentally and that their business model is actually working, which I already think it is. According to around 25 industry analysts that currently cover Nio, they think that the break-even point is very near right now. They say that Nio is going to post their final loss for the year of 2022 before turning a profit in 2023, and that's literally only a year away, which means that they are going to break even in just over or about a year from right now, which is absolutely amazing, and this should ignite their stock price. But we're going to be talking about why the stock price has not been ignited too much right now because of various political risks that we're going to talk about. So despite the surge in the Nio stock price for today, I don't anticipate that this steam will continue over the long term, at least until they can extinguish geopolitical risks and tensions between the United States and in China. Right now, Nio is projected to grow at around a 94% year-on-year rate over the next 4 years, according to analysts. This would mean that they are going to be very profitable in mid-2023, right where you see this red line that I've indicated here. So by 2024, this should be a fantastically profitable company, and this should excite investors. However, even though this company fundamentally is extremely sound, there are going to be plenty of risks. Also, I want to mention that the company's revenues, free cash flows, and cash flows from operations will also skyrocket after the company becomes profitable. However, there are significant risk factors when investing into Chinese foreign stocks, as well as Nio stock specifically, because on the chance that Nio does completely get delisted, it is going to cause the stock price to absolutely crash extremely low, and investors need to be aware of that. So at minimum, trading the company would be the safest. A long-term hold in this company would be extremely risky, which is why taking profits periodically on Nio and other electric vehicle makers over in China is going to be a fantastic strategy. Many investors have absolutely dumped Chinese stocks over the last year, which is mainly driven by geopolitical concerns due to the US regulatory agencies saying that Chinese stocks need to follow American accounting principles and various standards when reporting earnings. And because many of these companies haven't taken this seriously and have not met the US requirements, they are under a delisting risk, which is why investors are fleeing from Chinese companies. Another problem is that investors have recently thought up the possibility of China extending military support and financial aid to Russia as Russia invades Ukraine. And this would be very, very bad because, of course, there are going to be economic repercussions from doing something like this. We all know that Russian stocks right now have absolutely plummeted in price. So after the recent plunge, Nio stock has finally started to look extremely attractive to various investors that like to focus in on high growth stocks and high growth companies. Nio already has a fantastic foothold over in China in the electric vehicle market, and they are slowly expanding across Europe, to the point of Norway's central bank even buying shares into Nio in the fourth quarter. So as we can see, originally the stock spiked, and then ever since its all-time highs, it has then plummeted due to various macroeconomic factors. However, the risk for this is definitely not over, and it could definitely continue to fall despite the surge in price that we have experienced today. So there is a huge risk of investing into Nio, and like I said earlier, it's due to the US Securities and Exchange Commission, also known as the SEC, releasing a list of 5 Chinese companies that are currently listed on US stock markets to potentially be delisted, given their failure to comply with US audit rules. Now, Nio is not on this list. However, the SEC has clearly stated that it will continue to add names to this list, and a delisting is very probable for the majority of these companies if they do not comply with US audit regulations. And this would be absolutely catastrophic for various Chinese companies, which is really not good, and it's not good for investors either. So knowing that Nio is trading at an extremely cheap valuation right now, is this a good time to invest, or is the company an absolute money pit and it's going to go to zero due to the delisting risk? Well, honestly, you're taking a huge gamble here because you are betting that Chinese companies want to stay on the US stock exchanges because it would negatively impact China if they were delisted, because that cuts off loads of capital that company could have achieved otherwise. So there are 3 main scenarios here. Either the Chinese companies end up following the US audit regulations and they can continue to be listed on US exchanges. The second scenario is that they do not follow these audit regulations and then they get delisted from the United States, which would cause these stocks to absolutely plummet. Lastly, the third scenario, despite the SEC threatening Chinese companies to adhere to these audit regulations and they don't, it was just a bluff from the Securities and Exchange Commission and they won't actually delist this company. Now, I personally think probably the middle scenario of these companies actually getting delisted is the most probable in my opinion. However, there are Chinese companies that are following these rules, so it's not a risk to all Chinese companies as a whole. However, if you are invested into Chinese companies or foreign stocks, you really need to pay attention to this overall. However, even despite this delisting risk, I find it odd that the majority of analysts and retail investors are actually very bullish and positive about Nio stock. So unless Wall Street knows something that we don't, it's always good to take profits when you can, especially during times of uncertainty and doubt. So investing in Nio right now is best suited for investors that are willing to face extreme volatility and very, very high risk. Now, with that being said, this is going to be a very good risk to reward ratio, because if we are right and invest into this company and they don't get delisted and they comply with US audit regulations, the stock will not plummet, but instead absolutely skyrocket. Now, regardless of what happens with that, I want to say that fundamentally Nio is an extremely solid company. The only real gamble here is depending on what the company does in terms of these audit regulations. So from a fundamental standpoint, this company is very solid. However, the delisting risk is absolutely huge, so you could lose money on this. But if they don't get delisted, the upside is absolutely phenomenal. So I would love to hear your thoughts down below. Remember to comment your thoughts, subscribe if you are new, smash that like button right now, and I'll see you in the next YT video.